We're back, folks. We want to apologize for the technical problems we were having there, and we got word that many of you were not able to participate initially, so we want to just stop and start over and make sure everybody could be a part of things. So we're going to go back to the beginning here and talk about this USDA crop report. Certainly significant from the standpoint that there were no surprises in it of any magnitude, but there were some significant numbers in there, and certainly the market's reaction to it was significant today as well. I always say on report day, pay less attention to what the markets do right after the report release. Pay more attention to where we close that day, and there's various factors that played into that as well. And we're going to talk about that first of all to start off with. Keep in mind, we need to look at the broader perspective into which this report comes. Price is still a factor of supply and demand, but is modified by the flow of money. And money flow has been very significantly of late. And particularly talking about the dollar as it relates to monetary policy and as it relates to factors that are affecting competing currencies. We've been seeing a sharply lower euro in recent days, a weaker yen, and that's helping push the dollar higher, in fact, to 7-month highs today, with its own set of strength based on expectations the Federal Reserve will be raising interest rates before the end of the year. Now, as we came into today, those expectations were maybe based on Fed fund futures trading, maybe a little less than 10% odds that we'd see a November rate hike by the Fed right ahead of the election. Initially, the odds were around 70% of December rate hike. They pulled back a little bit then as we got early in the trading day. But overall, the expectations are that we will see a December Fed rate hike. The minutes of the September meeting were released 2 hours after the USDA crop report, and it showed while the Federal Reserve Board seems to be deeply divided, there are some strong opinions on that board that rates need to go up sooner rather than later. So overall, that contributing to the strength of the dollar as well. So in a strong dollar environment, we tend to see, and that was a weekly dollar chart, you can see it break out to the right. I'll go back to it. See it break out to the right there. Still within the overall tendency or the range that we've been in the last 21 months. But breaking out of the triangle formation on the right-hand side, overbought now, due for a correction, but still the path of least resistance been higher. When we look at the CRB index, which is one of the indices that we follow for the major commodity sector, it tends to move in the opposite direction of the dollar. And so, in fact, we saw a move on the right-hand side of that on the weekly chart here. After I made this chart and checked it early today and got it in for publishing, that we broke down from that resistance level at the top of the triangle. We're still in that converging triangle formation, but showing some weakness. If the dollar continues to go higher, then the broader commodities see some significant headwinds. And that's what we saw today. The correlation between the CRB, which we just saw, and money invested in the grain and oilseeds, corn, soybeans, and wheat, which is the shaded area, is very significant. The orange line there being the CRB index, the shaded area being net ownership of corn, soybeans, and wheat by the funds, and the correlation is rather strong there. So we saw a broad sell-off in the commodities today, particularly after the USDA crop report. That created some strong headwinds. Grain and oilseed prices tried to go higher after that report, especially soybeans and corn, but then were sold off and succumbed to that broader selling, finishing with a negative reaction on the charts following the report. Now, I've been showing you year-to-date movement of the commodities to this point. I'm going to focus here on the last 3 months, and you can see that as yields have been coming in higher than expected, corn, soybeans, and wheat have not performed well over the last several months. Looking at the data specifically, we see that USDA pegged the corn crop at 173.4, and soybeans at 51.4 bushels per acre. Both of those are just 1/10 of a bushel below the average trade guess. Now they're a little bit more below what our survey-based estimate is, which is projecting the January number. And we'll talk a little bit about that here in a little bit, about the tendencies from this point forward based on USDA history. Bottom line is it's still bigger than a 15 billion bushel corn crop, and it's a 4.269 billion soybean crop. Big crops to get rid of. Now, breaking it down state by state, you see that Illinois, 202 bushels per acre. A lot of people are going to have problems with that because the 2014 crop, which was the previous record, was at 200 million for Illinois. And a lot of people in Illinois did not think this crop, although very good, they didn't think it was quite as good. But there were some areas that were held the state back in 2014 that had much better crops this time around and allowed that state average to go up. Basically, when you look at the changes from last month, central and southern plains, across the south, and then up into the Ohio River Valley and the eastern Midwest, saw declines in yield this month, while the remaining states, Missouri being the exception, saw an increase in yield. Now, a new feature USDA added this month was this yield remote sensing modeling. And they're basically taking satellite data and from that projecting yields and putting together this map. And so you can see here, excuse me, that the highest yields, of course, are in Iowa, Illinois, southern Minnesota, and then into eastern Nebraska. And so no real surprises there. Gives you a little bit of sense. Find the county where you're at and get a little bit of sense from legend of what USDA is saying your yields were based on this satellite technology. Now, coming back to the fundamentals and how many ears per acre and counting the rows and everything, here's the data we see circled there, the October 16 data, that USDA pulled back its ear population a little bit. Had a big upward adjustment in population in September versus August, then pulled it back a little bit in October, but left the implied ear weight basically the same. And so if you recall the record high ear weight in August, we said may pull back. Some people thought it may pull back significantly, but historically, we don't see that much of an adjustment from that August ear weight. And really, that's not much of an adjustment. And so a little bit fewer ears, but basically the same weight as September, very close to it. As we look at soybean yield changes, no real changes in yield for Iowa, Wisconsin, Minnesota, outstanding crops there. For Ohio, Pennsylvania either. We saw some decreases in the south with exceptions being Mississippi. And we saw increases in yield about a bushel each for Kansas, Missouri, Illinois, and Indiana, with some increases in Dakotas as well. Some outstanding yields in some cases. As we look at then the same remote sensing modeling from USDA, the graphic you can find here again where you live at and see what the soybeans are. Once again, the highest yields really being Iowa, Illinois, and some of the surrounding areas. Interesting to look at. You may want to come back tonight and study this map a little bit more. Makes for good conversation. Now, implied pod weight came down a little bit from September, but number of pods or pod populations went up significantly from September. And I think this is a significant development in this report. Question is, what will happen for the November report when basically the bulk of the crop will be harvested and the results will largely be based on farmer surveys of what they received as well as other objective data. Looking at the impact then on ending stocks, USDA increased corn exports 50 million bushels. Soybean exports went up another 40 million bushels, and wheat exports up 25 million bushels. So the increased production, increased demand, net result, this is the bottom line that affects price movement. Soybeans, start there, 395 million bushels for ending stocks. So that's about a 35-day supply. Comfortable, not a lot of wiggle room there if there's problems in South America, but it's very comfortable if we do not have weather problems in South America. 395 was about 18 million less than what the trade expected, but 30 million above where we were last month. If you look, well, I'll come back to that here in a little bit. If you look at the corn ending stocks, 2.32 billion bushels. That's a lot of corn. That's if you believe USDA's demand estimates. I still have a problem with their demand estimates. I think they're too high on both exports and on feed usage. And so therefore I think it's subject. That is why my ending stocks estimate remains above 2.6 billion bushels, because I think USDA is too high on their demand estimates, and of course I'm using our survey-based yield estimate, which is 175.2 bushels per acre. Those two factors give me the big ending stocks estimate. For wheat, 1.138 billion bushels. Trade is looking for 1.153. I'm at 1.161, and here again it comes down to exports. USDA added more exports than what the trade expected, and certainly more than what I anticipated as well. Now, I mentioned we talked about where do we go from here on yields. I put here charts showing the history of yield changes for corn and soybeans from August into, from October, we're in October, from October into the January report when USDA issues its final production estimates. If you look back at the last 20 plus years, I think it's actually like 21 years or so, corn crops got smaller in the September and October reports basis August in 5 of those years. In 4 of those years, the crop continued to get smaller in January, by the January report. And I believe that the 5th year out of those 5, it just stayed the same as the November estimate. So overall, based on history of USDA, anything's possible, based on history of USDA since 1993, I believe it is here, yes, 93, we generally do not see the crop get bigger from this point if we follow the same pattern. On soybeans, we've seen that increase in yield from August in September, and again followed by another increase in October, 6 times out of those years going back to 1993. And of those 6 years, it was even larger in the November report in each of those 6 years, and in 4 of those 6 years, it was even larger yet in the January report. So this would suggest that the crop is getting bigger, although the fact that it came in less than the average trade guess, trade will interpret that as USDA is close. When we look at the significance or the scope of those changes, how much smaller might the crop be based on the years that I pinpointed there on the pattern we're in? Well, the biggest downward adjustment in corn was 2.4 bushels. And so I put that in my balance sheet that we'll come back to later, and you can see the impact on the balance sheet. On soybeans, the biggest increase was 0.7 bushels. So that would still be below where our survey-based estimate is, but that's also a very small subset. So we'll take a look at that balance sheet a little bit later, but I wanted to pass that on to you. Demand remains very strong, but I found it interesting that for the 2nd month in a row, USDA was paring back demand out of China for soybeans. I still question this move, and if you look back at USDA's tendency, they have a strong tendency to underestimate Chinese demand. So I'm still not putting confidence in this reduction in demand and believe that we will see an increase. In fact, when you look at USDA's tendencies over the last, this is going back to 95, 96, we see there that it's basically 75% of the time we see final soybean exports come in larger than what USDA projects in the October report. If you pick out those 15 years out of the 21, the increase averages a little over 90 million bushels. If you throw them all together, it averages a little over 50 million bushels. So take that off of ending stocks, if you will. If you look at how that translates into ending stocks, you can see here again the bias is for ending stocks to end up lower than what USDA projects in the October report. And I did put corn on here because on corn the tendency is more 50-50, closer to being higher as many times as lower. So no real tendencies. In other words, USDA does a pretty good job on average there. Translating it into stocks, I already mentioned where my ending stocks are in corn. I did make some adjustments today based on what I submitted. It actually raised my ending stocks estimate to just shy of 2.7 billion bushels, largely because the massive amount of feed wheat out there trying to displace feed corn. And I think USDA was too high anyway in the first place, and exports are questionable as well. If we put in a higher yield, and basically I increased it to, I believe, well, I think the higher yield I used was in like another 0.7 of a bushel or so, and I soften up demand a little bit, then we end up just shy of 3 billion bushels for the marketing year average cash price. On the other hand, if we use USDA's yield and make some adjustments on the demand side that I think are a little bit more realistic, we end up, in fact, I not only used USDA's yield, I came down that 2.4 million, bushels per acre that USDA has historically done one other time following the pattern it's currently on, and ended up with a yield of 171. Still used demand that was relatively close to USDA's estimate. I think I used their exports, their feed use number, and I increased ethanol by 30 million because I felt like they were too low there. And I still end up with ending stocks over 2 billion bushels. So there's nothing bullish, in my opinion, about the corn fundamentals. On soybeans, my estimate is 459, largely because of our higher survey-based yield of 52.5 bushels per acre. Now, if I add 0.7 of a bushel onto that, I end up with 482 million. I did add to the demand a little bit as well there. On the other hand, if we pull back to 50.5, which would be 2 bushels below our survey-based estimate, and a little over a bushel less than 1.4 million below USDA, we end up with stocks around 293 million. Tighter, certainly uncomfortable tight, but adequate to meet demand. Excuse me. So the focus now shifts to South America. Trade basically knows the size of the corn crop. It's increasingly comfortable with the size of the soybean crop. So now we focus on demand and we focus on South American weather. On the top, you will see rainfall forecasts for the key growing areas of Argentina and Brazil for the corn and soybean belt for the months of November, December, January, and February, the core growing season months. And so that'd be like May, June, July, and August equivalent for our growing season. Below that, you see the European monthly model. And what I want to pinpoint here is you see some dryness in the forecast for some of the key growing areas of Argentina and southern Brazil starting in December, expanding in January, kind of holding, shifting around a little bit in February. But the latest European model shifts the rainfall south and is much drier for some of the northern and eastern areas in the months of January and February. And this also is close to what the analog years would suggest as well. So there is increased risk. Now, it just catches kind of the eastern side of Mato Grosso, where much of the safrinha corn crop is. but there's still some key production areas in there. This does not look like a crop failure forecast, but it does look like a possibility. Particularly the January dryness would be of concern, as February we're already in the midst of harvest in much of this area. The January dryness is of concern, so we'll have to see as we get closer how this forecast shows signs of verifying, and certainly traders will be watching as well. So what's the take-home points? What's the bottom line? History says, and we will be surveying our customers again November 1st, but history says the corn crop gets a little bit smaller, but it's still above a 170 yield. We still keep ending stocks probably above 2 billion bushels. Wheat stocks are massive and are still a problem for corn. The trade assumes USDA is close on the soybean crop size, allowing it to shift its focus to the demand side ledger as well as the South American weather. South American weather will take on an increasing importance from this point forward, but problems will be essential to sustain a rally in soybeans. The funds love to own soybeans, but they need a reason to build ownership. And right now they don't have it. Weather would be something they'd certainly look for in order to encourage that or support it. So at this point, that covers the crop report. We're going to open it up for questions. If you have questions, be sure to enter them on your screen. And we'll begin by taking a look. We do have a couple questions that are in. They're coming in now. First of all, why so many bullish views on beans with world stocks way up? This question comes from Max. With record bean exports out of the U.S. and very small Brazilian beans available, aren't we heading for a significant decline next year? Weather permitting in Brazil and U.S. next year, price. Well, as we look at, first of all, start in Argentina. Because of free market reforms there, we're seeing a shift from soybeans to corn. Originally, we thought we'd see corn acres up about 25%. That's being pared back a little bit with the drop in corn prices of late. Soybeans still look to be down a little bit, not proportional, not the 25%, because bean acres were larger in the first place. But many of those corn acres will come from soybeans. Yields will probably be a little bit better, but overall, lower area of soybeans. Brazil, we're looking at maybe up 1% on soybean acres, but certainly less than some of the 4 to 6% we've been up in some past years. The market overall is trying to shift soybean production from South America to the United States and shift corn production from the United States to South America and to the Black Sea. So I am concerned going forward. I still think that we have to have an increase in soybean acres. This year's bigger crop does widen the safety margin somewhat, but we still need to increase acres next year if, in fact, we have a normal crop in South America. If it's a short crop, we need a much more significant increase. Andrew asks, at this point, are we now in a demand-driven market versus a supply-driven market? For soybeans, I would say we'll probably shift into it. Corn will try, depending on the numbers. They're going to be watching the exports and ethanol numbers on a weekly basis. But overall, I think that becomes the focus, focusing on demand from this point forward, as well as South American weather. Lincoln asks, why the aggressive rally in oats? Are oats still a leading indicator for the grains? Oats knows, oh, that's the phrase we all grew up with. That's a phrase that's been around for a long time. I do not see near the correlation anymore of late, so therefore I haven't really been following oats recently. I know that we've seen some volatility of late, but I haven't been following the fundamentals of it. We import most of the oats that we utilize in the United States, the majority of it, and so therefore the correlation with the other grains simply isn't there. Unfortunately, I just haven't had time to study those fundamentals to let you know what it is that's driving oats right now, other than I could say demand must be greater than what the supply is, trying to encourage more imports. Any more questions? Any more questions? We'll give it a few more minutes. Several of you usually have questions haven't heard from today. I know it's harvest time, and some of you are busy with harvest. Some of you are actually getting on and watching this evening rather than watching it live. But we'll give it a minute. Here we've got a question from Scott. With the FSA planted acres lower than USDA acres, do you think we will see a reduction in harvested acre for corn and soybeans? Also, how many acres excuse me, will not be harvested in the southern Minnesota area? I do not have an answer on the Minnesota. We're still gathering data on that. But overall, the FSA data would suggest, keep in mind FSA numbers are almost always less than what USDA uses in their balance sheet because they only reflect what's been certified, and there are some acres, some farmers every year who do not certify. Very small percent, but there are some that are there. So the FSA data had actually suggested an increase in acres. We did get an increase in corn acres today, a modest increase. We still could see a little bit more, but we'll have to look at the data into January as we get these monthly updates from FSA. If anything, we could add a few more for both corn and soybeans, but I don't expect any more significant changes, more than maybe 200,000-300,000 acres for corn and soybeans at this point. Evan writes, given today's report, where do you think hard red winter and soft red winter will go? Oh, the spread's already huge. In fact, I looked at the cash prices before coming in here, and hard red spring wheat cash prices nationally are approaching $2 premium to hard red winter. But when you look at soft red winter versus hard red winter, certainly we did see a big change in the spreads already this week after that September 30th report that showed much larger hard stocks than we did soft red winter wheat stocks. The market's been accounting for that. Overall, where will the go in that spread? I'm not going to make a prediction on that because we've factored much of it in. But I'm not going to make a prediction how far we can go because I think money flow could take it a little bit further than what the fundamentals justify. Anybody else for a last question or two here before we call it a day? Appreciate you getting on. It's a very busy time of the year. I know harvest is a priority this time of year. Some of you are seeing some rains slowing you up. Guess I talked long enough to get a couple more questions. First of all, we have a follow-up question from Lincoln. When could weather worries in South America start becoming a problem? When the weather becomes a problem. Right now, it's really not. I know there's some dry areas, a few dry patchy areas, but really nothing of significance. And those areas that are dry, for the most part, we are seeing some rains build up in that area. Now, I just got done talking about the forecast about the potential for dryness as we get into January and February. I don't think that's a market factor yet. I think it's something the market trades. And as we get closer, they want to see if those forecasts continue to pull forward. Those forecasts for drier weather in those areas I designated. If they continue to pull forward, then the trade will start paying more attention to it as we get into Thanksgiving or into December. George asks, how many percent of soybean and corn have been harvested? How is the weather for the next 2 weeks? Generally pretty favorable forecast. There will be interruptions. There usually are interruptions. It's not going to be a totally dry forecast, but we should be able to get harvest completed between the showers overall. What's the percent? Well, we were about half of the about half the soybean crop and a little bit short of a third of the corn crop in this last crop progress report that came out Monday. So with that, I'm going to call it a day with the report. Obviously not for work. We have plenty of work to do yet. That's all the questions we have for now. And hope to see you back next month in November for the next report and analysis, which right now on schedule for I believe that is November 9th. We'll be back with you and with another follow-up report. Thank you very much for being here today.